I want to get right to our next guest. He's Scott Burk of Canaccord Genuity. Scott is an oil services analyst. And Scott, thanks for joining us. Your report caught my eye this morning when I read it because you said that the oil stocks have already discounted a recession and $50 to $60 oil. Talk me through your reasoning.
That's right. We basically looked at what would happen to earnings estimates if growth were to decline by, if the revenues for these companies were to shrink by about 15 to 20%, and if margins were to go back to what we saw in the early part of 2010. And in that scenario, which we think would be a likely scenario for a $50 oil price environment, the stocks have already moved so much to the downside that they're already pricing in that recessionary environment. Are they a buy at this point, or do you sit tight? You know, we think they are at this point. We actually made the point in our note that since they're already pricing in the recession, if you take any kind of upside from that recessionary environment, for example, oil prices today are currently still at $80 a barrel. So if they stay at those levels, then the stocks have anywhere from 35 to 100% upside from the current prices. Hey, what is sort of the key number for oil where capital expenditures are either going up or going down, and therefore either helping or hurting these oil services companies? What's the key number for oil? Yeah, we did a survey on that about a month ago among the various oil service companies, and the key number that came up was $80 a barrel. It ranged from as low as $65 to $90 a barrel, where they'd expect to see some kind of change in capital expenditures. So anything much below $80 a barrel on a sustained basis would be negative for capital expenditures, while something above, say, 90 or 100, that's going to actually accelerate things beyond what our current estimates are. Now, Scott, are there any names that can actually do well even if you have a recession? Yeah, in a recession, again, I'd say a moderate recession, because if it got really bad and oil prices went down to 30 or 40, all these stocks are just going to get, going to have some more significant downside. But if it's a moderate recession, we think the names that have been doing well so far in this downturn, that is the offshore drillers, can probably do okay in 2012 as well. And part of the reason is that their oil prices that they're exposed to are actually Brent prices, which are $20 higher than what we're getting here in the United States for WTI. So, Brent prices at $100 a barrel means you'll continue to see deep water activity. So that's good for companies like Atwood or an Ensco, which are our two favorite names in the offshore driller space.
All right, we're going to take a break. Scott Burk, thank you so much over at Canaccord Genuity. When we come